Today, will the building approval improvements be short-lived? Hello again, it's Martin North from Digital Finance Analytics World. That is posts covering finance and property news with a distinctively Australian flavour. Well, the total number of dwellings approved rose 3.6% in seasonally adjusted terms in November, and that followed a 13.6% fall in October, according to the latest data from the ABS. They said the rise in the total number of dwellings approved in November was driven by an increase in approvals for private sector dwellings excluding houses, which rose 9.7%. Private sector houses continue to level off, up 1.4% in November, following a 3.5% rise in October. The series has been at historically elevated levels over the past year, largely driven by government stimulus and record low interest rates. While private house approvals are no longer at record highs, the number result remains 25.8% higher than the pre-pandemic level in November 2019, indicating ongoing strength in the detached housing market. Across Australia, the number of dwelling approvals rose in Tasmania, up 40.8%, Queensland up 20%, South Australia up 14.5%, and Victoria up 8.9%. New South Wales was down 18.4%, and Western Australia fell 1.1%, all in seasonally adjusted terms. Approvals for private sector houses rose in Queensland at 8.4% higher, South Australia 6.4% higher, and New South Wales up 5.4%. There were falls, though, recorded in Western Australia, down 12.1%, and Victoria down 0.8%. And the value of total building approvals rose 14.8% in November. The increase was driven by a rise in the value of non-residential building, up 28.3%, coming off a 20% fall in October. The value of total residential buildings rose 7.1%, with an 8.5% increase in the value of new residential buildings and a 0.8% fall in alterations and additions. The number of residential construction approvals has shifted upwards, yet it still remains distinctly lower than figures recorded earlier in 2021. A new report published by ANZ Research noted that over the month of November, residential building approvals in Australia did increase by 3.6% to 16,448, following on from a 40-month low for growth in October, when approvals declined by 12.8%. The paper, which presented internal research alongside data from the ABS, Macro Bond and Bloomberg, has noted the number of unit and house building approvals increased month to month. Unit approvals grew by 9.7% from 4,846 to 5,315, in contrast to the fall of 8.8%, while houses were up by 1.4% to 10,892, tapering from the previous month's increase of 4.3%. The rise in units was the driving force behind the rebound in overall residential construction approvals during November, but building approvals are still 10.5% lower than September, at 18,385, and 30.1% lower than the peak in March, when it was 23,539. ANZ senior economist Adelaide Timbrell has warned this uptick in construction may not continue, stating that while working from home may support approvals in the short term and that Omicron could induce higher savings rates, there are bigger risks to building approvals, specifically higher interest rates. We've already seen that fixed interest rates have come up from their lows, and we still expect the Reserve Bank to potentially end its quantitative easing program as early as February, which means that fixed interest rates are likely to keep rising. As the average cost of borrowing rises, the cost of servicing a new build rises, but the average amount of money that a person can borrow for a new home also increases, and the average round cake capacity declines. That means that someone who might have been able to borrow a certain amount last year may only be able to borrow a smaller amount this year, and that's something that can reduce the number of people who are going ahead with approvals for new builds. And Ms. Timbrell added that another factor is how the federal government's grant HomeBuilder is now no longer being an option, meaning there are also fewer people who are going to be building new homes. We also know that because HomeBuilder brought forward a lot of housing projects, there are a lot of people who maybe usually would have started to build a home this year or next that did it last year instead when they could have got HomeBuilder. So all of these factors together do create a risk of building approvals falling further in the longer term. And eventually, once the cash rate actually starts to go up, that will hit people's borrowing capacity even more, and that can reduce the ability of people to build new homes as well. Across the state, significant growth in unit approvals was recorded across South Australia, up 65.7%, Queensland up 47.4%, and Victoria up 28.8%. But not every state experienced similar results, with New South Wales reporting unit approvals down by 48.7% for the month, and that's its lowest sum since February 2012. In contrast, the most populous states saw an uptick in housing approvals, up by 5.4%, while Queensland, up 7.4%, and South Australia increased by 6.4%, reported similar results. An economist with investor group Naxos recently noted that in the current low-rate environment, accelerating housing approvals will increase supply, but they aren't likely to be matched by demand as mortgage debt has escalated. The research note stated housing debt has risen to a historically high level of 140% of income. Foreign demand has been on a downward trend since the Foreign Investment Review Board restricted investments from overseas in 2015. All in all, the vacancy rate should soon start to rise. And as such, the Naxos analysis speculated this in turn could lead to a market correction. Eventually, with wage growth remaining structurally weak, a higher interest rate could destabilise the housing market, the note asserted. And one final point, if you look at the high-rise data over a period of time, it's extremely volatile because, of course, a single high-rise can have a large number of units. And that means that just one approval can move the numbers a long way up or down. Therefore, frankly, the high-rise statistics are at best wobbly. The housing, whereas the single housing unit numbers are perhaps a little bit more reliable. That's something that many people don't seem to understand. So the bottom line is this. Sure, there might have been a little uptick last month, but the longer-term trajectory looks to me to be downward from this point. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.